SMF Street Traders, welcome. Today's date happens to be 9/14 of 2010, and we're updating our worldwide network and our foreign traders, which everyone from every country in the world can be on SMF Street. And one of the things that SMF Street did long before Goldman or JP Morgan or any of them out there did was we took the growth rate down, folks. Before the year started, we said year-end growth was at 1.5%, if not lower, moving forward. Forget about the election. Forget about the gimmicks. Forget about the short covering. We're going in to the earnings season in October of 2010. From the very bottom of this chart, when we were way down, earnings were re-leveraged for about 6 quarters, and we were long during that whole time. And in selected areas, in selected sectors of the market, that growth would be higher because of the re-leveraging process, and people would be spending money around the world. Let me tell you that the United States growth is going to be, as I have said, forward-looking. 2011, 12, and 13, you're going to have a lower growth, which means that we're going to be in professional trading ranges on all of the indexes and sectors, and we're going to be range bound within that growth pattern in the S&P 500 earnings. Where the S&P 500 earnings were down here was a place to buy them. We shorted them when they were, S&P earnings were right about $120 up here. We said that wholesale was at $55. Well, guess what? Over many months, it all happened right here. And when those earnings on the S&P 500 got down to a wholesale growth rate, you had these big moves. Let me tell you something. There's a big downside here, folks. And over the next several quarters, not everything will collapse. We said in the last quarterly earnings in July that we would peak, that the earnings would be good, and they were darn good. Nothing wrong with it. But we were selling short, and stocks were selling off. Intel, perfect example. Gave upside guidance, executed well. We sold short that thing in after hours at $22.70. Look where Intel is today. Look at where Cisco is. Not only that, the CEO of Google came out today and said, look, growth is going to be a lot slower. They're all way behind the curve. There's a difference between the true value of earnings, and there's a difference between Wall Street mechanics during live trading days. Floor traders have got theirs. Retail has theirs. That's retail investors, like most people. The thing about that I want to tell you is that lower growth later on, there's a big floor. There's a big hole here, down below here. And basically, as we move in the October, the earnings value and what companies report and guidances that companies give are totally different than how Wall Street tries to pirate the shorts out. And you got these bear and bull scraps. You know, we teach everyone that here. What I am trying to tell you is that U.S. growth goes lower. That makes that, look, U.S. growth, when it was growing off of the re-leveraging process, we had the great move. But look, what took it up takes it down. Is it going to happen in one day? I never said that. What I am saying, forward-looking, starting in October, we will start to see where some of the earnings and some of the guidances won't hold up. That means that Cisco John Chambers came out. He said, hey, it's lower. Not only that, Intel, who had given the upside guidances, comes out a couple weeks ago and says, oh, we got to drop our forecast. And so did Texas Instruments. This is just the beginning, people. Okay? So basically, you got to understand, for the retail investor, if you're watching this, and the IRA and the 401k holder, you better get on over here right away. And the thing about it, SMF Street is a leading firm as far as we are concerned, because we have all the live videos on our website. We point the events out before they happen, not afterwards. And how do you make money? I'm telling you that there's a big hole. The upside that they're trying to get, the bull tries to use all of these inside backdoor mechanics behind the scenes that 99% of investors and even traders, they don't even know what that is. Well, after being around 30 years in the business, we just have had the experience on a daily compounded basis, on a weekly and monthly and yearly basis of understanding what the gimmicks and what's behind that door. And D needs to know what those are, Main Street, because you do. And it's unfortunate that it's been hidden and has always been hidden so well that people don't know. They miss that move because they're petrified when they're down here. Then up here, the growth rate that created the growth rate off of the bottom is that all the stimuluses are wearing off. Look at the election trade. Who's going to be a Democrat? Who's going to be a Republican? Who's going to be this? Who's going to be that? That's all irrelevant. Those are actual just intraday market moves and volatility. And I want to separate volatility with reality. Volatility is market volatility. Earnings reality and growth rate is a different reality that will catch up to these markets. And the releveraging growth took it up, and the deleveraging growth will end up failing as we start moving the next couple of quarters. We have took the growth rate down. We were well ahead of this a year ago. Just like we were well ahead of it over here. We got the blogs, we got the live videos, we got the live trades, we got the live analysis. We're here to help you. We're not here to sell you nothing. If you want to get involved in our 52-week school, you want to learn about economic indicators, you want to learn about earnings season, you want to learn about earnings growth, you want to learn about how to be a market maker as far as trading and taking gains and knowing when to be short, knowing when to be long, well, our door's open to you. We even fund your trading account with our own money. Go find that. We have a platform that we have behind you, and we put our money behind you because we're good at what we do. And I'm saying to people, and this video is dedicated to the bigger people that are in our databases and the small person just as well. It doesn't matter. Money's money, and the analysis is the analysis. And we are correct. And I'm telling you that right now, the current market environment, gold was up high today. Lots of things have been releveraging. It's an options expiration, and they bucked the trend the first 2 weeks. But let me tell you something, the realities will catch up to these markets. And you don't want to be on the other side of that reality in the distorted part of what's happening. And to find out more, I would get involved and take a free day trial if you're curious. So back to the SMF Street Traders and investors worldwide. As we move forward through October, earnings season is that if these valuations and this little move in the S&P and the stocks walking up on light volume, they're just going to collapse, just like we said it would over here. We called that down move. Go find it on our video site. Live. We told people, get out. Bam. Look, the reality is, as we move forward, you have these phenomenal type of events and very weird behaviors within markets and exchanges that happen. But as we have told every people, we have been finding growth outside of the U.S. There are places around the world that are doing quite well, and their societies are doing quite well, and their incomes are doing well, and their companies are doing well. But the U.S. is lagging. We are not the powerhouse here. No. We're being beat out by China. We're being beat out by India. We're being beat out by Brazil. We're being beat out by other countries around the world. Singapore, look at their way that they do things. Look at where other parts of the world who do not live in exuberance are able to manage their lives using the SMF reality check. And the thing about it is, when there's failure, there's great moves on the downside, just like this. And we got this move. We know what we're doing. But then again, in the releveraging, meaning going up, and the earnings trough for wholesale, and then there's great moves going that way. Then we called the top, knowing that 2010 was going to be a lower growth rate in the second half of the year, where everyone was so bullish. Oh boy, we're going to go to 1,350 on the S&P. We're going back up here to 1,400 on the S&P. No, you're not. And the analysts don't have it right either. And they better get down to the core inside intrinsic wholesale value, about forward-looking earnings and forward quarters. We're taking that U.S. growth rate down for the next several years. We did it a year ago. We mapped this all out. We planned it all out. If it's your first time seeing the video, I would stay tuned and be coming back every day. But more importantly, if you want high-risk management training, we've got 90-day modules. We got the 52-week school. And we have so many different services to offer you. We're willing to offer them to you. But you got to be accountable for you. You've got to take the next best step for you. The little 5-day training courses that people put out ain't going to cut it. If it did, I'd be doing that with people. But I don't do that with people because that is not the reality. It's going to take me a long time, day by day, trade by trade, long, short, managing risk for a period of months, but you can participate and start getting that value right away. You need to take that step moving forward because you deserve to take these moves down. You deserve to take those moves up. And there's a big hole down here. Look at here, right here. Let's draw that line. There's a lot more downside risk in lower growth environments and deleverage environments than there is to the upside. The upside is limited, man. I mean, that's where the reversal was at 1200. And just remember, there are very different phases and mechanical phases of exchanges you're not aware of because they don't let you know that stuff. They're not going to let you know what their operations are. We will let you know because we're one of those very few people in the world who have been and understand, and we developed a platform that will decipher these things for you. It doesn't have an opinion. It's pure mathematical. Once again, S&P forward-looking earnings. There's a big room to go down. On the upside, you have little room to the upside versus the downside risk. Better know your sectors. Better know your companies. Better understand their guidances, better be able to understand their earnings, business model. We'll teach you all that. We've been trading these publicly traded companies for the last 3 decades. The new ones that have come out, there are various different ways of trading S&P technology earnings. There's new technology, there's old technology. And we're always going to have bright spots. The brightest spot is that the U.S. is not up to par with India and China and Brazil and other places. Why don't you think about Argentina did well? A lot of emerging countries did well. And most emerging countries do not believe in reckless endangerment. What does that reckless endangerment mean? That means their deficits are in control, much better than the U.S., and their growth patterns reflect it. There's a lot to learn around those subjects. And it's not sitting there in the chat room and talking to a bunch of people who don't even know what they're doing. Stay away from that. That's not proactive for you. What's proactive is getting in here and learning step by step what it's about. What the results, what the analysis to back it up. That's what it is about for you. And SMF Street opened the doors to Main Street. Lower growth rate. Earnings are going to start coming down, just like we said that the earnings were going to collapse over here in 07, and they sure did. And they sure did in a big way. And that earnings growth from here to there is starting to get lower, moving forward. Have a good day, everyone. Remember, education and trading is just as wealthy as being a millionaire because you know how to manage your life and the outcome and understanding the gimmicks of Wall Street, understanding what everything is about. That's what we're here for on a daily basis.